Hello, everyone, and welcome to 2025. And this is the very first market update that we're going to be delivering on the Brisbane property market. This is going to be reporting on all of that data up to the end of December 2024, and we're going to look holistically at that calendar year in review as well. So let's get right into it now. First of all, property listings. It is a seasonal trend where we see listings drop in December, and that was no difference just last year. We saw total listings drop as well as new listings drop, and that is often because sellers will hold off putting their properties on the market until we see more buyers move back into the market due to that Christmas and festive season. The biggest thing to note on this graph is that long-term trend of total listings is still well down here in Brisbane compared to what it has historically been over the last 5 to 10 years. So anywhere between 28 and 32,000 properties typically would be on the market at any particular time. Right now, that number's below 15,000 here in Brisbane, but in the last 12 months or so, it's been hovering somewhere between that 18 to 20,000 listings, which is still well below where we should be based on the number of buyers in the market. Looking at sales volumes now, Brisbane up 5.5% over the last 12 months. That's in the 12 months through to the end of December. So that's an indication of buyer demand and market activity. Still plenty of buyers transacting in a market where we've got that limited supply. So that is that fundamental imbalance between demand and supply that we're seeing. Auction clearance rates, you can see there in December, not many auctions come through after that very first weekend, so we don't have valid data for the full month. We'll be reporting that again from February because, again, January, we don't typically see many auctions come through except big auction days at the end of the month. So we'll keep you updated on any of those results as they become available and if they are meaningful. Days on market, currently 22 days. So the market is moving at a slightly slower rate than it was 12 months ago. 12 months ago, we were looking at 19 days on market. So buyers have a little bit more time, although many of the quality properties in the affordable price bracket are still being snapped up very quickly. In fact, just after the very first open home. Let's look at some of the index results from CoreLogic. So CoreLogic showed that throughout the month of December, we saw a 0.5% change in dwelling values as a whole. That moved quarterly numbers to 1.3% price gains and annually 11.2%. So that puts the median dwelling value here in Brisbane at $890,746. And that does put Brisbane as the second most expensive capital city market behind Sydney based on those dwelling values. Looking at dwelling values reported by PropTrack, it actually showed no change in dwelling values for the month of December. Looking at the data, annual growth showed 11.4%, and the median value, according to PropTrack, sitting at $863,000. By capital, we're looking at capital city price segregation in this particular graph. So you can see there the more affordable end of the market is leading the growth across Brisbane, Adelaide, Perth and Darwin. In Brisbane, we've got 2.6% growth in the 3 months to December in the lowest 25% of property values. Now, this is dwellings, so it does incorporate units and townhouses typically in that lower end market. The middle segment of the market, that's the middle 50% of property price dwellings, 1.5% growth over 3 months. And then the top end of the market, that's the most expensive quartile, 0.4% change in property values in the 3 months to December. So it's really important to get an understanding of what's happening in different areas as well as different price segments, because this is not always accurately representing every pocket within Brisbane. Looking at the 12-month change, this is CoreLogic data, and this is the home value index for all dwellings. You can see there the 3 cities that have outperformed on an annual basis throughout 2024. Perth leading the way with 19.1% increase in dwelling values, 13.1% in Adelaide, and Brisbane with 11.2%. Now, that's in stark contrast to cities such as Melbourne with -3% growth, Hobart -0.6% growth, Sydney at 2.3%, Darwin at 0.8% and Canberra at -0.4%. Looking at quarterly changes, this is tracking what's happening over the last 3 months. So you can see there, Brisbane, Adelaide and Perth continue to be the three capital city markets that are outperforming, and we've got negative price growth coming through in Sydney and Melbourne, especially in the last 3 months of 2024. So those markets decelerated at a faster pace at that time. We've also seen Perth and Adelaide's rate of growth slow down at a faster rate in December than it did here in Brisbane, and that's something that will roll through in the quarterly figures next month. Let's look at house values. It's a bit more meaningful when we do break down the data into house and unit values. So looking at all houses across Greater Brisbane, remembering this is a huge geographical area, so it's not necessarily representative of the exact pocket you might be looking to buy in, but it gives us broad trends of what's happening in a large city market. 0.4% growth in house values according to CoreLogic throughout December. That tracks with quarterly growth at 1.1% and annual growth at 10.2% over the 12 months through to December. Gross yields sitting at 3.4% in the house market, and median values for a house in Greater Brisbane currently sitting at $977,575. Now that value is definitely the second most expensive capital value or capital city median value for houses across all of Australia, again second behind Sydney. We have reported previously that the price per square metre, median value per square metre, is still more affordable in Brisbane compared to the likes of Melbourne. So again, relying on top level data is not always accurately reflecting what your dollar will buy. It's important to understand those metrics in more detail. Looking at PropTrack data for houses, again, no change in Brisbane property values in monthly growth and annual growth at 10.6%, which is very similar to what that CoreLogic data showed on an annual basis. Now let's look at unit values. Now the unit market in Brisbane has continued to outperform. This is anything that comes under a body corporate or strata scheme, so it does include townhouses as well as units. Monthly growth throughout December, 0.8%, quarterly growth at 2%, and the year-to-date or annual growth for 2024 sat at 16.6%. So that's a lot higher than the growth in the detached house market here in Brisbane. Yields are also higher, gross yields at 4.5% in the unit market, and the median value for a unit now in Greater Brisbane is $680,893, making Brisbane the second most expensive capital city market for units, again behind Sydney. Unit values, according to PropTrack, declined 0.1% throughout December, annual growth at 15.4%, which is also fairly representative of what the CoreLogic data showed as well. Looking at property value changes now, this graph actually tracks the monthly price change in both segments of the market here in Brisbane. Houses are the dark bars, units are the light blue bars, and you can see there for the last several months since interest rates started to stabilise, we've actually seen positive price growth across both segments of the market. However, in the last 7 or 8 months, you can really see how far ahead units and townhouses have escalated, and a lot of that is due to affordability constraints and also potentially the new stamp duty concessions that were brought in for first home buyers with purchases up to $700,000. So obviously with unit median values sitting at less than this threshold, we can see a lot of people moving into that market that may be in that first home buyer space. Now looking at the 12-month value changes in the house and unit market across all capital city markets. So it's very obvious there that the three cities of Brisbane, Adelaide and Perth are continuing to outperform on a 12-month basis. But you can see there the difference between the house markets and the unit markets in each city. And it's definitely more pronounced here in Brisbane, whereby we've got the unit market really outperforming the house market. That is apparent also in Adelaide and Perth. Looking at the 3-month value changes, again, you can see the unit markets in Brisbane, Adelaide and Perth are all outperforming their house markets as well, which is different to what historically we may have seen between both segments of the market. Certainly here in Brisbane, it is a drive for affordability. Also, most of the higher density unit markets are in locations that are closer to the CBD, so potentially people are making lifestyle choices as well. Looking at vacancy rates, there was no change in December. We note in January, a seasonal lift has gone up to 1.2%, still well below where it needs to be to ensure that we have that rental price stability. That said, rents fairly steady between last month and this month. We've got house rents increasing 3.2% over the last 12 months here in Brisbane, and unit rents increasing 3.3%. So you may recall when we were reporting on these figures 12 months ago, we were in double-digit price growth for both segments of the market. So tenants will be finding a lot of relief as they go to renew their tenancy agreements for the next 12 months, because that rental price growth has definitely stabilised. That said, we're still seeing markets within markets. In some areas, we're seeing much stronger pressure on rents than other areas, depending on local vacancy rates. So just to summarise our market here in Brisbane, throughout 2024, Brisbane was one of the top 3 capital cities for capital growth. So it did outperform many of the larger markets on the east coast of Australia. Listings, we do expect that we'll see more listings come through in January, which will give buyers a little bit more choice. But along with listings, usually at the beginning of the year, we see more buyer activity as well. So we might actually still see high levels of competition, especially on quality homes and units. Price growth is expected to continue throughout 2025, although our prediction is that the rate of growth will be slower than it was throughout 2024. Now, we feel this will still happen based on the fundamental imbalance between the number of properties available for sale and the number of people in the market looking to buy. And this is what is putting that pressure on prices. We're definitely seeing it in areas that are more affordable for locals than other areas that might be pretty much dominated by investment activity, especially where rents are starting to be capped at affordability constraints for local tenants as well. Looking at that unit and townhouse market, we do expect that that segment of the market will continue to outperform the detached house market in the coming months. And again, that's based on what we're seeing on the ground in terms of buyer activity. So we do expect that segment of the market to continue to flourish. As I do every month, if you'd like to connect with us here at Streamline Property Buyers, you can scan this QR code. It will take you to some resources that we provide for free. You are also able to book a call with our team should you wish to do so, and we look forward to connecting with you again soon. Thank you very much for your time, and bye for now.